Candlestick signals and patterns allow an investor to be prepared for when a reversal is about to occur. As illustrated in the Dow over the past couple of weeks, we started seeing buy signals. And these buy signals, such as the piercing signal and the piercing signal and the hammer signal, were occurring in the oversold area. The visuals of candlestick signals allow you to analyze what is happening in investor sentiment at important technical levels. For example, the Dow is starting to show buy signals in the oversold area right at the 200-day moving average, which in the past had been acting as a support level. This made it much more clear to identify the next price move could be back up to the top of this channel, because this is what everybody else is seeing. That analysis was more evident in the NASDAQ, where when it pulled back right to the 50-day moving average, it did a piercing type signal, a bullish engulfing signal, and now trading back up above the T-line. Stochastics coming up. What are the probabilities? Probabilities are that it's going to come back up to the top of the trend channel. That allows us to anticipate that for the next 3, 4, 5 trading days, we should be in an uptrend, taking advantage of individual stock trades. You do not have to be a sophisticated analyst to understand what price movements are going to produce the best profits. We recognized the flat handle of a scoop pattern on VSH. And what started the uptrend? A left-right combo, a doji followed by a bullish engulfing signal, followed by a gap up. That alone tells us there's strong buying coming in. You add the factor that it was coming out of a scoop type pattern flat handle, that gives that much more credibility to this being a very strong uptrend. KEM was based upon the same rationale. Our recommendation on KEM was based upon a flat handle, a scoop type pattern starting with a doji, Morningstar type signal, a close above the T-line, followed by a doji sandwich through the handle. And what do we know about the doji sandwich? There's going to be more upside. And if there's more upside, what's that tell us about the handle? It's not acting as resistance. We're going to get a good slingshot effect to the upside. This is not rocket science. This is just analyzing the signals that tell us we're in a good bullish pattern, as well as a pattern that's developing that tells us we've got a high probability of a good trade. Just recognizing the signal, such as in INNT, we've got a bullish engulfing signal, and where did it occur? Right here on the T-line. What type of pattern does that set up? Well, we had a strong first move, a pullback. Get ready for the next move on a J-hook pattern. Does that necessarily mean we're going to have a J-hook pattern? Not really, but we know what the makeup would be. If it opens positive tomorrow and starts trading positive, there was good evidence that the T-line was going to act as support, and that this is just profit taking after a strong uptrend, getting ready for the next price move. And we know what the magnitude of this price move should be. If we moved from approximately the $10 range to the $27 range, that means 17 points from here should take you up toward the $40 area. Again, investor sentiment works the same way time after time. That's what makes it so easy to identify the patterns that are going to work with high probabilities and high profit prospects. That'll be it. We'll see you in the chat room.